Come on. Okay, good. So welcome to this new webinar today, a Q&A session as we've been doing lately for the last months. Today is the 1st May 2020. Okay, and I have to do this. I have to read the trading disclaimer and all that. You can pause the video and read it anytime. So I've got some suggestions from some of you. Welcome, Davi, well, everyone, Clive, William, Gopi, Holfo, Rudy, Wolfgang, Jangwar, and many others. Okay, so I've got some suggestions from some of you, so I'm going to start straight away from those suggestions that you have just typed in the chat box. I don't know if you can read what everybody's saying, can you? Because this is the first time I'm using this. Okay, great. Before with the go to webinar, you just couldn't. So now that's great. Good. Okay, good. So I've got some suggestion over here. So the first one, let's start with the CAD. Somebody asked about this one, CAD versus the CC. Okay, and then I'm gonna do the Kiwi dollar, Europe Kiwi, Reliance, Copper, Nifty Bank, Nifty, and then if we still have time, I'm gonna go over this. Okay, so let's start with CAD Swiss. Who suggested this one? So because he said that possibly gold, okay, and where that he had a loss on this one. So let's do the analysis. I'm gonna be using instead here on the Forex 6 months, 3 months, monthly, weekly, daily, H4. Okay, good. So I'm going to start on this one. So what is the bias on this one? Anybody? By looking at all these time frames at once, what is the bias on this one? Okay, good. Well, Rudy's saying long for me because I think he was the one who took the trade. So, but as we can see here, the bias is clearly short. We have everything is pointing down, supply zones over there, very strong area supply. And we were expecting price to rally high. I've been talking about this for some time. With these bullish pink candles, we're expecting price to rally. This is anything longs over here is counter trend, remember, and shorts will be possible right there at the top. So let me draw the area of supply on the weekly. Okay, then on the daily we have the trend line over there. What is the long on 69.37? 69 around here. That's where you took the long. The long. Rudy? Well, anybody can tell us about this one because the level would be something like that. I don't know if this is supply or not, demand or not. If it eliminated something here on the left, probably. Yeah, that one over there, that was the area of supply that was eliminated. So can anybody, I believe you can also annotate on this, on the chart. So, and I will be able to see your names and all that. So you've got a pen, I believe, Rudy and everyone, so you can draw on the charts, I believe. So what is the strength of this impulse, of this area of demand? Rudy, you are the one who took the trade. What do we need in order to go long? We need an imbalance, an impulse that is strong enough to eliminate the opposing area. That's fine. Okay, it did that. 1 second, I'm going to the annotation tool. Where is it? Well, so we've got that, and it is accomplished. It is in an uptrend, 4-hour and all that, but we need 2-to-1 imbalance, and we also need two ERCs. And as you can see here, we don't have the 2 ERCs. We've got, this is the imbalance, we have 1 ERC, and that's it. And hardly 2-to-1, because from here to here we've got like there would be 1 to 1 more or less, and 2 to 1 over there. So this level is not a 2 to 1 imbalance. It did accomplish the elimination of this area of supply, but only one ERC. So let me ask you now, Rudy, in a downtrend, in a trending market, we need an imbalance, the basing structure, and then we need at least 2 ERCs and 2 to 1, isn't it? Everyone agrees with it? Okay, so that's what we need. So that's with trading with the trend, okay, with the trend. So now let me ask you, if you are taking counter-trend longs because the bias is shorts, what do you want this imbalance to look like? Equal, as strong, or even stronger? Okay, Rudy? So everyone, well, yeah, stronger. You guys, right? I mean, at least doesn't logic tell you that at least it should be as strong as the imbalance with the trend? Okay, it should be as strong at least, but we are talking about counter trend, so at least as strong. And this one didn't comply with rules. It doesn't have 2 ERCs. It didn't accomplish. Well, it did accomplish the elimination of this area, but it did not create a 2 to 1 imbalance, and it doesn't have 2 ERCs. Okay, so that's the reason why that trade, as per the rules, it wouldn't have been a valid one. Okay, good. And it should have some significance on the high time frame, like bigger demand in control and low in the curve and all that. Exactly, as well, Prakash. So we've got here what kind of confluences we have. We don't have any weekly bullish engulfing pattern. We don't have any monthly bullish engulfing pattern. We don't have any 20 MA because the 20 MA is not wrong here, but it's bearish, as you can see. So there's no confluence. So this one is a very aggressive. I was saying the counter trend longs on the way up, but obviously you have to analyze the strength of the impulses and the imbalances, and based on that, then take the trade. But it is this one over there, that's great for shorts, but it just didn't rally up there. Okay. The daily out of alignment, probably because we have, well, any area of demand eliminated. We've got an area of demand over there right now because there was a trend line like that. So this one is an imbalance, not eliminated yet, or maybe low 68.45, 68. Yes, it's being eliminated. So now the daily is out of alignment, and there is a brand new area of supply that will be confirmed at the end of the day and the week when this candle consolidates away. So this imbalance here is pretty strong compared to the impulses that we have on the left. Okay, good. Price bounce from 50%. Yeah, more or less. David, you are referring to the 50% range on the weekly time frame, probably there. Okay, good. So that's one. Rudy, there was another one. You said Kiwi dollar. That's the one you said. Okay. So what is the bias? Anyone? What is the bias on Kiwi dollar? Down. I mean, it's clear. So if we start with the bigger time frames here, okay, we've got bearish. Come on, we've got bearish impulses, bearish engulfing pattern. One area of supply here in control. I'm not drawing them because they are in the weekly analysis on the community. Another monthly supply zone, a very strong area of supply where we were allowed to go short, but price did not retrace into that area. So probably you are talking about this area of demand on the 4-hour, Rudy? That's the trade that you took. So you are saying that weekly and daily are up for you. So why is the weekly time frame in an uptrend? if everything is pointing down. There is not a single area of imbalance supply zone of supply eliminated, so it's just a downtrend. So this is not a valid trend line connecting these two. Okay, the daily is in an uptrend, yes, but not the weekly. So month is in a downtrend, supply in control. 3 months in a downtrend, so shorts, shorts, weekly shorts. Daily out of alignment, where do we go shorts? A weekly area of supply. Anything else, counter trend. And like I said before, on the previous analysis on CAD Swiss franc, this is not, there's nothing of quality over here. Okay, Gopi is asking about 6 months demand in control. So let me see, let me clear this. This is 6 months. Well, this is the trend line that we had before. That is supply. Then this is demand. So we don't have any 6 months area of demand. I mean, we actually, let me draw this. This is supply, eliminated. This is demand, eliminated. That gives us this area of supply. So now we've got a downtrend on the Kiwi dollar. Shall we with me? Yep. So that's a downtrend. There is no 6 months area of demand over here. This is an impulse. 6 months demand is right down there at the origin of the move. Make sense? Yeah, everyone? So it's short bias. This is the area where we are looking to go short. We can draw the level a little bit wider if your broker has it like that. Probably a wider ERC, candlestick body. So we are allowed to go short in the 3-month sequence, short any areas of supply. We've got one over here. In the monthly sequence, we've got an area of supply in control over there, and another area of supply created over there. I'm doing this a little bit fast, okay, so we have more time for analysis for other tickers. Downtrend in the monthly, short and areas of supply. One is being created over there. So we now have weekly area supply too high in the range. So we have short bias. New areas of supply, we've got one right over there. Okay, and it's creating a strong impulse right now. So the bias is short. Even if this would have been, imagine this scenario, Rudy and everyone, imagine that there was a very strong area of, I'm just getting used to this, one sec, but I've got my annotation tool and it's not popping up anywhere. So one sec, it's this one, and it's not loading. I don't know why. It's not anywhere. I don't know what's going on. Maybe it's got a conflict with Zoom and all that. Okay, so the bearish bias was very clear, okay, in all the time frames. So if anything short, we just have to be patient enough to wait for the right area to go long. Or short, in this case, on short. We are too high in the range. Now we are waiting for price to retrace. Set and forget is not possible now. We have to wait for nearest supply, and that's the one. Good? Okay, so that's Kiwi dollar. We did CAD versus Swiss franc. Let's take a look who suggested Euro Kiwi. Euro Kiwi. Okay, hollow. Okay, good. So, what is? Do you have any question about this? Any specific question? We've got an area of supply right there, single candle at the base, okay? Or we can use the open and close candlestick body. So we've got a weekly uptrend, a weekly area of demand. These 6 months area of supply has been eliminated together with these 6 months, 3 months area of supply. We've got a monthly area of demand. And now we have a very strong area of demand on the 4-hour. So what is the bias on this one? In the monthly sequence, we've got a monthly uptrend, okay? Monthly uptrend after eliminating this area of supply. So longs down there with a nested area of demand on the weekly, which is right there. But on the weekly sequence and also on the monthly, we reach the middle of the range with a strong area of demand over there, hit the area, and now it's providing us with a 4-hour area of demand as confirmation of this weekly area of demand. It also has the 20 MA confluence. It's not drawn here, but I believe it should be somewhere. So, well, I'm not using it now. And we have a bullish engulfing pattern as confluence. So longs at this 4-hour area of demand with bullish confluence on the weekly demand in control, weekly in an uptrend, monthly in an uptrend, 3 months in an uptrend, 6 months in an uptrend. Make sense? This one is a clear one. Okay, it's not consolidating. We've got 6 months up, 3 months up, monthly up, weekly up, daily out of alignment. So we've got a daily out of alignment. We go long where? At the weekly area of demand. At which imbalances? The weekly sequence has the 4 hours at the anti-time frame. We go down 2 time frames, daily, 4 hour, longs. Make sense? So that's the kind of rational, kind of thinking you have to be thinking. Well, it's not the right word, but that's the kind of the way you should be looking at the charts by using the realignment tool. The realignment concept is a very, very powerful way of analyzing the charts. So everything's in an uptrend, which is the lowest time frame out of alignment, the 4 hour. Do we have confluence in the daily? Yes. So all the time frames are up except the daily and the 4 hour. So we wait at the only time frame, which is still the lowest one, that's still in an uptrend, which is the weekly. So longs are the weekly. Prakash is saying something like on the monthly and weekly this chart shows failed ERC. This one over here. Saying we're referring to that one, but that's pretty strong. I mean, we can use those as the departure. Okay, what we can't use is this as a basing structure for an imbalance. But this one is good. This one is departures pretty good. Anwar, is there a daily zone nesting in the weekly demand zone? Nope, there was nothing. We were saying that we were not allowed to go long, set and forget. It was an area of demand over there, but the strength of the impulse, not good. So we had to wait. It is very easy to say, yes, I should be long over there. It is a valid setup. No, it is not. Trading in hindsight is very easy. Anyone can do it. But this was not a valid set and forget type of trade, unless due to the whole area of demand on the weekly and you just take all half of it. But on the daily, you would have to wait for a new area of demand, and that's the confirmation of that imbalance. Pier Paolo, this is the second weekly daily 4-hour trade for Euro Kiwi. What do you mean the second? This is the first one. So which one are you referring to? So Daniel, failed ERC has to be accompanied with another ERC, correct? Well, it doesn't really matter. I mean, we've got here, this is an ERC. We just remove the bearish pink candle. It just ends up as an ERC, really. It's just, this is very common when a bigger time frame imbalance is eliminated. So it's just telling us that there is a lot of strength up there, and then it's ready to move down. But we can use failed ERC, strong failed ERCs as part of the imbalance. The origin of the move is here, and this one is the accomplishment. It eliminated that area of supply. So the origin of the move is right there. So we just can trade it. We can't set and forget on the daily because the level was not great. But now we've got our entry. Dabi, or new area of demand created on 4 hour after a bigger drop, it fell short. Okay, yeah. Daily fail ERC daily. You mean this one? Daniel? Yeah, so that's not a good one. I mean, we would have wanted something like this departure over there, and then it would have been great. If we had had a super wide ERC candle whose close was around here, awesome, but it wasn't. So that's the way it works. Okay, good. So now the Euro Kiwi is done already. So let's have a look at Nifty and Nifty Bank. I think that Prakash is the one that suggested this one, isn't it? What was it, you, Prakash? Yeah, well, we're going to do it anyways. So here we've got the 6 months area of demand in control. Look at the reaction. Okay, this is in an uptrend. These here, this is not demand. It didn't consolidate away. This is demand. Okay, try to retrace. It couldn't. It took like 2.5 years for price to retrace. This is the coronavirus COVID-19. And that's what happened with the virus. Well, at least with the fear caused to the whole war about the how contagious it is and all that. So now this is super cheap and lots of people and investors are buying it because this is just a bargain. Okay, so that's a 6 months area of demand. So we've got that area of demand, and now we have, okay, on the monthly at the early move, another one over here, trend overextension, trend line break, hit the area, and it provided an area of demand on the daily, and it, depending on how you draw it, it is a new imbalance over there, and now price is running, and it has a lot of room for price to keep on rallying all the way up. Where? All the way up to the monthly supply zone. So longs all the way up unless we start having strong bearish engulfing pattern here on the weekly, new areas of supply in the daily, and then from the middle of the range, maybe we could start thinking of going short in the monthly and weekly sequences. But there is nothing to go short at until price reaches that area. Make sense? Good? Okay, good. This is the Nifty Bank, Nifty 50. Okay. Okay, Andre is asking me, okay, one second, private, to look at CSP1. Okay, I'm gonna do that as well. So Bank Nifty. This one is exactly the same thing, Prakash. 6 months area of demand in control. We've got a very strong area of supply right there after the coronavirus effect, let's call it that way. And then we've got these daily area of demand after the trend line was broken. We have this bearish engulfing pattern, as I mentioned in the previous analysis. If this bearish engulfing pattern is the highs are eliminated, there's a lot of room for price to keep on rallying all the way up to the monthly area of supply. So we have long bias, counter trend on the monthly, but with the trend on the 6 months time frame. If we go to the 12 months chart, we also have the 12 months area of demand in an uptrend and with 12 months area of demand in control. Make sense? Prakash and anyone? We've got 12 months area of demand in control, 3 months area of demand in control, and then after a super strong bearish impulse, as supply and demand traders, we should be expecting a bigger retracement because the underlying asset, in this case, the Bank Nifty index, is very, very cheap. So now it's time to buy because it's a bargain. And we have bigger time frame areas of demand in control, 3 months, 6 months, and 12 months. And if we had a 24 months time frame, then we would have two 12 months in candlesticks, basing candles, and that means we would have a bullish impulse, probably a bullish engulfing pattern on the 24 months chart. By the way, I suggested TradingView to add the 24 months, and they said they will do it in the future, but no estimated time. Because that's the maximum we can add at 12 months. So Davi counter trend, but with the support of very high time frame, I see. Yeah, correct, Davi. Makes sense? So as you can see, the power of the super big time frame areas of imbalance is enormous, is gigantic. Okay, super, super strong. I mean, most people are not even looking at the weekly time frame or the monthly time frame. That's like science fiction for most of intraday traders, even swing traders. That's science fiction. I mean, looking at the weekly, monthly chart. Wow, no, no, no. I prefer to watch a Netflix movie. I mean, it's like they don't understand that. They don't understand why price is reacting to these super strong imbalances, and that happens over and over and over and over. Okay. Pier Paolo, yes, I had to get a TradingView subscription so I can take advantage of very high time frame. Yes, and it's very powerful. I posted a list of stocks last week or maybe a couple of weeks ago, which have very big time frame areas of demand in control, great for longs. I'm long in a few of them, and I was going to analyze this one, okay, because I already locked in some profits today. So as we can see here, okay, we've got a 12-month area of demand over here. Okay, I went long like over there, and then now I am using options to buy stocks and all that. So now I just close my options, roll the call and all that, and now this trade is free for me right now because it's just I just closed the trade and bought another call, and I got like $500 something like that for that, and then this trade is completely free right now. So I'm just gonna show you what I did for those. I've got a screenshot over here which I did a few moments ago, I believe. Okay, there it is. Okay, so I just did this today for $582. So I just got down there and the price was rallying, broke these highs, and then I managed my entry, and now this trade should be a free trade on this one. Okay, and this is happening on many other I'm just taking screenshots when I take the trade, when I manage the trade, and all that. So I'm just trying to show you the power of these imbalances. We've got many other imbalances like this one. Okay, let me read you. I find drawing zones and stocks much more difficult because of pre and post market trading, at least on the daily as anti-time frame. Well, I'm not looking at the pre and post market. I'm just looking at these time frames. I don't care about the pre and post. I mean, I'm just looking. Do you think we should care? Okay, let me draw this. So we've got, that we have this 12 months area of demand in control. Okay, Trudy and anyone. Why? Can you tell me why should I look at the pre and post market on the hourly chart, 4 hour, and the daily? Why? Why? You don't. You don't need to look at anything. Okay. The only bias right now, the only thing you should be thinking right now is finding the right setup or the right moment according to your trading plan to go long on this one. As simple as that. So why am I going to be looking at the pre-market or aftermarket to see if it rallied like 2% more and all that? We don't care about that. Okay? On this one, anti-time frame, I'm using the 12 months, 6 months, and then when I start seeing some reaction, then I just wait for some weeks. Okay, I have to wait for some weeks because otherwise, if you buy options, you are buying time. Okay, and if you imagine you buy 3 months of time, let's say. Okay, so price hits the 12 months every month. We've got 1, 2, 3, 4, 5 weeks lost. Almost half of the time you bought is gone. Makes sense? Almost half of the time is gone. So if the entry costs you, let's say, like $300, okay, you have probably lost half of it, and you have now $150 or $200, okay, loss already. Okay, because we just were too anxious to buy down there. Another thing would be like, okay, I'm not gonna buy like 3 months, I'm gonna buy 1 year. Well, that's another thing. Okay, but that's more expensive. Then you have to have locked in like probably $600, $800 for a year. So you just wait. Okay. Yes, you have to wait for. I mean, logic tells you what happens. What does usually happen when a price reaches a super strong, well, an imbalance on the bigger time frames? Does it always react to it like this? Does it kiss the level and reacts? What does it usually happen? Exactly, Davi. It ranges. It ranges. Accumulates if it is demand, distributes if it is supply. So am I going to be buying when it is accumulating? No, I'm going to wait for signs of the end of that accumulation. Make sense? So that's how it works. Okay, that's how it works, nothing else. So, good. So Prakash, when we trade monthly, weekly, daily, and then the stock falls so much to 12 months demand area, that would mean so many supplies on monthly, weekly, etc. So it would consolidate before it goes up. Then that's not exactly buying the trend; it's buying the low on the curve. Yeah, it's buying counter trend. I mean, a low in the curve on this one, on the range of the bigger time frame area of demand. But since we know, as supply and demand traders, what do we know? Okay, what do we know? We know that after a very strong sell-off, what are we expecting? What are we expecting after a strong move? We're expecting a bigger retracement. So after a very strong move, we're expecting a bigger retracement. If we add, on top of that, we add that there is a very strong area of imbalance in control, that is supporting that, it's even better, isn't it? Isn't it? Yeah. So we've got 12 months, a strong area of demand after a very strong impulse. And look at the quality of this bearish impulse. Okay? Pretty and clear. So, like I said, I'm going to show you my entry because it's drawn always on the chart because you are asking. So my entry is drawn here. Okay? That's where I entered. Right there. Okay? Right there. Why? Because it just broke that range over there, and I'm just waiting for this is a very bad monthly area of supply. I just took that trade over there, waiting because I instead, after breaking the highs, yes, but it's supported by 12 months, 6 months, and all that. Okay? That's how it goes. Well, let me show you. That's not the original trade. One second. That's the adjustment that it did yesterday. One second. Let me locate because it should be down there. Down here somewhere, options, and then here it is. That should be the one. Okay, this is the exact moment of the entry. Okay, that's the entry. Okay, and then price is rallying, and that's the management. Okay. So we are not teaching options in the committee. It's a monster, and learning about options. Lots of things you have to take into account. And if you watch some videos on YouTube, you're going to learn the basics, the rights, the obligations, and all that. You're going to see that everyone is telling you that the only way to make money in options is by selling premium. Well, it's obviously if you buy time to go long, then you are paying a debit to go long. So every single day you are losing value of that in that trade. If you sell an option, you are given a credit. So every single day that passes, you are closer to keeping that full credit that you receive. So selling options is more logical than buying options. Okay? So you will learn about that when you read that. But what they don't talk is about context. If you watch videos on YouTube about options and all that, you're not gonna see almost anyone looking at a bloody chart. And sorry for the word. You will not see a chart. They are always talking about all kind of option strategy and all that, and they are not using market structure. They are not using context. They are not using top-down analysis. They are not using multiple time frame analysis. They are not using supply and demand. They are not using any of that. Any of that. So obviously, if you buy time out of the blue, nowhere, no man's land, you're going to be losing most of the time. So instead of buying time, you sell time because you get paid for selling time. Make sense? That's more or less what options is all about. Buying time, there's one buyer of time on one side, and there's one seller of time on the other side. If I buy time, I pay for that time. If I sell time, I'm getting paid for selling that time. That's it. Okay? But as supply and demand traders, we know where to buy and where to sell. So we've got an edge. Buying calls and puts, buying options, buying time and not selling time. If you buy time without an edge, without structure, market context, location, top-down analysis, you will be losing money. But if you've got an edge to support your trades, then it should work. Okay? Make sense? This is a very, very basic introduction to options. You should read about that, watch videos and all that. But it's funny if you watch, because I've searched a lot of information about options in the past, and I couldn't find anyone looking at the charts. If I found a couple that look at the daily time frame, and on the daily time frame, it's just a mess. I mean, when you look at the daily time frame on many of the, I don't know, like Visa, I mean, this is just, who's going to trade this? If this is the only time frame that you're looking at, how are you going to trade this? Make sense? When you look at this, what decision do you make? Do I buy? Do I sell? Why is price running right now? Why is dropping right now? Can anybody tell me? So instead of putting all this into context, they will say, okay, if I see all these indicators, the MACD cross up, the Bollinger Bands, whatever, RSI, CCI, overbought, oversold, blah, 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 and all that kind of confluences, indicators, then I'm going to be buying. The 20 EMAs cross over the 50 or the 50 over 100, then I'm going to be going long or going short. Okay? Somebody's got the microphone activated. I don't know why. What's copy? Okay? Makes sense? So if you look at this, or like the one that we were looking at before, you look, if you are the typical trader, okay? The typical trader is looking at the chart like this. So can you tell me what is the decision? What are you inclined to do here? So imagine this scenario. I'm going to use the replay functionality from TradingView, and I'm going to erase those couple weeks. Okay? So this is what we are looking at right now on Liberty Global. Okay? So what is the bias here? Dabi and all the others? Down, isn't it? I mean, why should I be thinking of going long? Why? Can anybody tell me? Why? There's no reason to go long at all. At all. But if you start adding time frames and imbalances, context, structure, location, bigger time frames, supply and demand, then I am now selling into what? So let me do this. We already know where we are. Okay, I'm just going to do this. Look where we are. Okay, at the 12 months area of demand, and the 3 months area of demand, and the 6 months area of demand. So if you do not know where you are or about the context, you don't know where you are or who you are trading against. Make sense? Let me read Pierre Paolo. Why would you say it's necessary to use options to trade stocks with supply and demand, or is it safe to buy the underlying asset? Well, there's a very clear answer to that, and it is one of the most important decisions that you're going to have to make. Well, what happens? Because it happens. Okay, if you imagine that you buy here, one sec, I'm gonna draw here. You buy there. Come on, I need to get used to using this. You buy there, and then price drops all the way down to here. in just a couple of weeks. Imagine the coronavirus and all that. What happens? Pierre Paolo? You could say, well, no, I had my stop loss there. Do you think your stop loss is going to be respected with a gap down and the coronavirus effect and everybody fearing that they're going to lose all their money, they are closing the positions? Nobody is interested in that stock anymore. Okay? The stop loss will not stop you from losing. It shouldn't be called like that. Okay? It doesn't stop you from losing. Okay? It's a crash, you are over. Okay? So if you want to be fully protected, you have to do something else. You just can't buy the underlying asset naked, even with a stop loss. That's naked because a black swan event or something like the coronavirus with all the investors doing what they are doing, well, I'm not going to go over it, okay? And then you would be losing a lot of money. So in hindsight, everything is great. I should have bought there, and then now I would be like winning pretty good amount of money. But that's not the way we should do it. Okay, if instead you buy a CFD, European can do that. On some countries, on the US, it is not allowed. On the CFD, a contract for difference, you are buying a more leveraged product. Maybe you're going to have like 10 to 1 leverage, sometimes 20 to 1. So if these cost like $119, then you have the power like multiplied by 10. You can buy 10 times or discount it. Okay, you get the price 10 times less. But the same thing, the stop loss has to be there unless you use brokers like CMC Markets and others that they've got the guaranteed stop loss and you are paying a premium to protect, to really stop you from losing. I never use those, so I don't know if it works. And I believe when I checked it, not all the assets had the guaranteed stop loss. Only, well, quite a few of them, but not all of them. And then with the CFD, you are being charged an interest rate every single day you hold the trade. Make sense? So you can buy the stock. That's the first option you have. And how risky is it, even with a stop loss? I would say that it is risky. Secondly, you could buy the CFD. I'm going to read all your questions now. I will reply, okay? Don't worry, I'm just going over this. CFD is also very risky. Okay? So the third option that you have is you buy the stock and then you protect it with an option that goes against it, a bearish option. That's 100% safe. Okay? A fourth option is the stock, okay, plus, it's the CFD, if your country allows you to do that, plus the option in the opposite direction. That's also 100% safe. And the fifth option is you do not own any stock, you don't own any CFD, you don't own any stock or CFD plus the protection, you just buy or sell option, buy or sell, depending if you want to buy time or sell time. So only the fourth and the fifth are 100% bulletproof in your risk. That's called hedging, yes. Make sense? So these are, I believe, maybe I'm missing something, okay, but these are the 5 ways to buy a stock. You buy the stock or the CFD, you buy the stock with a real 100% stop loss with a hedge against it. So you buy here, but then you sell a little bit higher. If it drops, you earn money with the option. And that's like sort of covering the idea of if instead of using a stop loss, you are using an option to hedge. Okay, then you buy the CFD with the interest rates and all that. Okay, or you just buy the call, or you buy more complex strategies and all that, and options. You will learn about that if you start with the options. Okay. So, well, you need 100 share stocks to protect one option? Exactly, correct. So when you told me, Wolfgang, that you were buying like pieces of stock, like odd lots, Interactive Brokers are odd lots. So the minimum amount of shares is 100. So now Interactive Brokers allows you to buy like 5 or 10 or 11. Okay, but if you want to protect it, the only way to protect it is, or a good way to protect it is with an option. And an option always controls 100 shares. It does not control 5, 11, or any other odd number. Okay? Make sense? So copy, most stock traders trading stocks on daily time frame are using trend lines on RSI plus MA, support resistance lines, so no supply and demand levels. Exactly. That's what I saw. Okay. Damian, what filters do you use to identify opportunity to trade this? What filter do you think I used, Damian, or anyone? How do you think I came up with this imbalance? Anyone? What is the best way to come up or to have a watch list? A real watch list where you with stocks or assets that you really trust. The best way to have a watch list, no scanner, no Finbis. You can use those, okay, as a starting point. Okay, so you filter like, okay, you go to Finbis, okay, and you go like, one sec, you go like to, okay, bookmarks. I'm just going to have more space. What's going on here? Bookmarks. It's not working. Come on. Okay. So I don't know what's going on here. Clear. I'm gonna use then Safari. One sec. Instead, let's go to Finbis. Let's go to the screener. Okay. So let me read you. New world is opening up here for me, Pier Paolo. Great. I'm glad to help, my friend. Watch list to find the training. Okay, good. So this is how I started. Okay. I learned about Finbase, and I said, okay, I'm going to use a screener to find some stocks. Okay, so I would say, I don't know if you know about this one. It's very powerful. It has lots of features that I love. Okay, I started with this one. So I'm going to say I need a market capitalization. I want stocks that are solid, being there for quite a long time and all that. I don't want stocks with a market cap of less than 2 billion. So I am going to be using at minimum 2 billions to 2 billion or more. Okay, so over 2 millions. So out of 200, or how many were there? 7,000 stocks. Now I've got 1,600. Okay, now I would say IPO date, a day where these stocks were first traded in the exchange. So I'm going to say minimum more than 5 years. Now 300 less. Then you start adding lots of things here. So it should be optionable. Okay, now 50 less. Liquidity as well, important. Be aware of the earning amounts announcement. Earning amounts doesn't really matter unless you are doing very short-term trades. Okay. Now the volume, what was it? Average volume, minimum 300, 500K per day. Now we've got even less, 200 less. So you start adding this, and then price, we don't want penny stock, we want stocks that are at least over $10. Now we've got 1,000, okay? So we start adding all those kind of things, and we reduce the amount of stocks to 1,019. Then there will be other things that you will have to take into consideration. And when you look at the chart, sometimes you will say, no, I'm not going to trade that chart and all that. So we go here, we click on charts, and then we click on candle, and then we click on monthly. And now you have a bird view of all the stocks, like 50 at once. Make sense? That's really powerful. So we can see there's an imbalance here on ACAT over there, another one over there for short, another one over there, okay, another one over there. So it's very powerful. But that's how it started. Then like I said before, which is the most powerful way of making your watch list, to trust your watch list? How would you trust somebody else's watch list or a software, a watch list created by a software? Is there any software that can filter out the imbalances based on set and forgets rules? Nope, there are not. Okay, so what is the best way to filter out these trades and these stocks? The only way, exactly, Damian. My brain, my head, is nothing like human brain. Nothing can beat the human brain unless Google creates the AlphaGo version 3. Okay, they already have beaten all the best chess players and the Go World War, the championship, the champion from world champion, I believe, from Korea, South Korea. I mean, trail line breaks. I'm using them. I am painting the trail line manually. So I mean, when you know what you are doing and you know the rules, you know where these imbalances are. I mean, tell me a stock, anyone, any stock. I don't even need to draw the imbalances. Tell me any stock. Caterpillar, cat. So, isn't this obvious? I mean, one sec. This is old. What do we have here? Do I need to draw any imbalance? Who can tell me the bias right now? Longs. Why longs? Why longs? If we take a look at the daily, is this longs? No, it is not. Okay. But we have 12 months area of demand in control, 3 months area of demand in control. Okay, this was overextension, so we need to new level to go long at. Okay, so we've got 6 months, 3 months, 6 months should be there, 3 months should be there. This should be the monthly, this should be the weekly, should be the daily. Okay, so now we have these super strong areas of demand there. So that's what we need to do right now. We need to go long. We need to think of long. Price could start dropping again and hit the nested area of demand on the 6 months. Yes, of course. But right now, it hasn't happened yet. Shorts will be possible there at the monthly supply zone. So what I was telling you before is that the best way to, how did I locate these imbalances? Well, I located these imbalances, well, with my own eyes. Is the best way. Once you've got them located, what do you think is going to, I don't need to go over the 12 months, 6 months, and 3 months chart every single week. Why? Because they take months to be created and or eliminated. So I just know that the imbalance is in control. I will be looking for great areas of demand to go long. Demand price did not retrace the area of demand. It looks like it's going to keep on dropping all the way down. So that long possibility could be down there. That's a weekly area of demand, or not yet. No, it is not, because this is a weekly area of supply and it hasn't been eliminated yet. So you trade in the, as in, one sec. Or was it overshot? I believe it was overshot by a tick. High 129.56, 60. One tick. Come on, crazy. That's so common. Okay, so if you are trading the weekly sequence, short bias. Monthly sequence, short bias. Bigger time frames. If you are aware there are bigger time frames in control, 3 month sequence, new weekly area demand. So every time you choose a sequence or the top time frame of your sequence, then you have to look 2 time frames below to locate at an imbalance, or at least a confluence on those. So we start getting, imagine this scenario. Imagine that we start getting like here, we don't have that one. As a price drops down there, imagine down there. And when it drops, it creates an ERC like this. And then the next month, we get this. What is that? What is that pattern? Bullish engulfing pattern. Correct, Venu, Davi, and everyone. So that is a bullish engulfing pattern. And well, where is this bullish engulfing pattern happening? It's not happening in no man's land. Where is it happening? Look where it is happening. So we've got the most powerful, in my humble opinion, the most powerful two candlestick pattern, the engulfing pattern. We have that into the right context and location. Make sense? That's why we can use candlestick patterns are great, but in no man's land with no context, they are useless. Useless. Okay? So that's how we should be looking at this. So if price drops down there, blah, 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 and then price drops down there, we start seeing like engulfing patterns over there on the weekly, another engulfing pattern, which has been very common on many of the stocks. We've got a rally, an engulfing, another engulfing, two engulfing patterns like that, and then stock did like this. So that's when you can say, hey, the accumulation process is over, and now price is ready to rally higher. This is not the case because we don't have any engulfing pattern. Make sense? But there are other stocks with that kind of visual. Make sense? So if we take a look, okay, so we did Nifty Bank. Somebody asked about CSP1. CSP1, or is it this one? Is it that one? Who asked about this one? Who suggested this one? I think this is the one. Yeah, Andre. Okay, good. This is the one. Wow. Well, what do we have here? What is the bias? Up. So clear uptrend. So we've got, this is what we have. Let me show you what we have here. We've got 6 months area of demand in control. Because this rally, 2-to-1 imbalance, 2 ERCs, consolidation away with this candle, and then price dropped. Okay? Consolidation away, dropped. That's the entry. Okay? So we've got a 3 months area of demand right there in control. A previous area of demand in control. Consolidation away, retrace, consolidation away, retrace. 3 months in an uptrend, 6 months in an uptrend. Bullish confluence on the 12 months chart. And we've got here the monthly demand zone in control again. So longs are near areas of demand. Right now on the daily, this is, on many stocks, okay, taking a decision based on the daily is suicidal. Look at this. I'm not going to look at the daily to make a decision. Will you? I'm not. This is just chaos. But when you merge all these candles with all this, then you start getting weekly candles and monthly candles. And since on the daily we have only 8 hours of trading a day, I believe, then the other 14 hours, the other hours from the 24 hours of a day are not traded. So we have the pre-market, the aftermarket, the gaps and all that. But in a week, there are no gaps between one week and the other. So all the 5 candles are merged into one solid weekly candle. So I'm not looking at the small imbalances unless they are clear like this one. See? That's pretty clear. But down there, it's very, very bad. Okay? On Finbase, I think you can filter using candlestick patterns as engulfing, if my memory serves me correctly, but the engulfing pattern is not available. Copy. Okay. And it's not, like Brian said, it's not as accurate. I had to create my own engulfing pattern like this one. It's much more accurate than the one on TradingView. TradingView, you will be missing most of these patterns. But with the indicator that I created, there are more occurrences. Okay. Pierre Paolo, remember when I was a prop trader trading 1 and 5 minutes in the US stocks, crazy stuff. And now who was going to tell you that you were going to be looking at a 6 months and a 3 months time frame? That's pretty crazy, isn't it? Pretty crazy. So that's the, so longs are near the demand, but the quality of that, look at the daily. This is a mess. So we're going to have to wait for price to retrace down there and see if we get another, at least another weekly engulfing pattern, pink candle, or at least a bullish principal pattern, something like that before pulling the trigger, okay? Because this is a little bit tricky, pretty tricky. So that's CSP1. I'm going to add it to my watch list, okay? And what else? Somebody said about copper. Copper, ticker HG. Somebody. Okay, copper, continuous contract. So here we are. Well, this one is not as easy. Now your eyes got used to looking at Liberty Global. You got used to looking at Caterpillar, which aren't there obvious areas of imbalance there? Yes, there are. But now when you look at copper, that's not so clear. So if I had to choose, like out of all the stocks that we have seen, what would we do with copper? Bye-bye. I'm not trading you, my friend. But we are going to do the analysis. Okay? We're going to do the analysis. The imbalance is right there. Okay? We are having bearish impulses on the 12 months, on the 6 months, no lower low. But here we've got a rally and a drop, So we've got this. So what do we have? 6 months area of demand in control. The same thing we could be said about 3 months, sorry. So we've got 3 months demand in control. Okay? So that's what we have. On the monthly, this is a real mess. Okay, but it's reacting more than 6 candles. That's the area of demand. So longs any areas of demand, if anything. And in the weekly sequence, we've got a very strong area of demand that has been eliminated. So we've got, if you are a trader trading the weekly sequence, you've got a pretty strong weekly area of supply right there to trade shorts. Make sense? So it all depends on the sequence that you're trading. That's copper. So we could see we looked at Nifty, great area of demand. Well, let me do this because otherwise I'm going to forget about it. We did Nifty, okay, Nifty. We did also Bank Nifty. So Nifty, Bank Nifty, 12-month demand zone, 6-month demand zone, okay? Nifty, come on, 6 months, 12 months, longs. Liberty Global, 12 months, 6 months, 3 months, long. We also looked at Caterpillar, 12 months, 3 months, longs. We also looked at this one, demand, longs. And now we got to copper. Okay, that's not so clear because it's not in a downtrend anymore, it's not in an uptrend anymore, it's consolidating. So this one is much more difficult to trade. Make sense? So out of all these 6 or 7 assets that we've been looking at, this is the least clear. Okay? Make sense? Okay, most of them are exactly the same, blah, blah. Need to go feed the family. Okay, bye-bye. Rudy, have a great day. Have a great weekend. Damien is asking about EuroCAD weekly sequence. Can you guess where I am? Where I took a loss? Okay, let me take a look. Okay, EuroCAD and Reliance. Okay. Okay, let's take a look at EuroCAD. Well, I believe that you know where you took the loss, Damien. Well, what do we know about the EuroCAD? What is the trend on the monthly. It's a little bit tricky, okay? Because we have this monthly area of supply, I guess you took along right in the middle of the range. So that's the area of supply in control. That's the area of supply. No, sorry, that was eliminated. The one at the extreme is the one in control. And when you look at the chart, Damien, and anyone, where if you look just exclusively at the weekly time frame, where would you trade? I believe you can draw on my charts, okay? You have a functionality there, a brush or something like that, or highlighter, and you can draw, and even your names will appear here. I tried it the other day on my laptop. So 143. Yeah, exactly. That's the trade. Okay? That where supply areas they are eliminated. So what is the strongest impulse on this chart? Well, that one's medium, okay? But this is not as good, fell ERCs, but that one's good, but a lot of trading in the zone. Look at this one, only 1 week, and then look at the impulse. So if you are patient enough, then this is where you should be looking to go long at. What happened? The distance from here, proximal line of the weekly area of supply, more or less, to the weekly area of demand, right there, what is it? Right there. This is the middle of range. And like we say in the lesson, diddle in the middle. At the 50% range, here it is, Gopi, you see? Gopi, you can use arrows and all that. I can see people say, where are you going to buy? You can say here, here, okay? So this is the strongest imbalance on the chart. So you have to patiently wait for price to drop down there before going long. Going short on the way down, it can work, obviously, but look what happened. So let me take a look at the trade that he possibly took. Do you take the 4 hour maybe? 4 hour air supply, Damien? Or something like that? So which 4 hour area of supply did you take? Because there is nothing here. This one? You can draw on top of it, okay? Is this the one that you took? Okay. Because this is what we have. Okay. This is what we have. So if you decided to take that up there, well, that's even worse because that one over there has only got 1 ERC. Okay, that's even worse. If you told me, okay, I took that one, well, I could say, well, that's pretty strong, okay? But that one over there, very bad. Not only that, but we have the 4 hour out of alignment. No 4 hour areas of supply are possible for set and forget. Okay, then we've got a daily area of supply over there. Okay, daily area of supply. The daily was something like that. Down, you could say, okay, good, but that's not a trend line. The trend line is like this. This is a rally and a drop. Okay? We don't have any bearish confluence here. No weekly bearish engulfing pattern, no monthly weekly bearish engulfing pattern. Well, we have that one over there, yeah, but very poor. So in the middle of the range, no trade. So you have to wait. You have to be more patient. So that's what I love about stocks. Why do I love stocks? Because there are hundreds, okay, to look at, hundreds of them. So I came up with a list, okay, of stocks. And this is the one I'm watching closely. And this is, look at all the stocks over here, okay, the list that I made for you. Today the S&P is dropping and all that, and all of them are dropping again. But we've got here 3 months area of demand. On this one, look at the strength of this imbalance. It almost reached that area of demand. Look at this one, BG as well. Well, like that area of demand, it didn't reach it, but I'm watching closely. Okay, on BGS as well, I'm long this one from down there after the engulfing pattern and then in profit. Okay, so look at all this area of demand, area of demand, area of demand in control. CC, look at this one, 12 months demand in control, 6 months demand in control, 3 months demand in control. I mean, what can you tell about this? I mean, you look at many others and like copper or CSP1, I don't know, 3 months out of alignment. Come on, 6 months, 3 months, everything is looking bullish. Look at this one, 12 months average, almost in control and creating a bullish engulfing pattern and all that. I missed this trade. I should have been going long about there, but I missed it. Okay. You can really get precise with what you want with stocks, but with FX, you get what you get. Consolidation is mostly what you get. Yeah, unless you trade the smaller time frames, then you're going to have trends. So I've been trading, in my beginnings, I was trading the 5-minute charts and the 1-minute charts on Forex. That's how it started, using the 6 and 12 EMA crosses MACD and okay, which one was it? Yeah, 6 and 12 EMA and MACD, yeah. And crazy. I've got enough. And now I'm just, as you can see, no indicators. I know what I want to buy. And if I keep on going over this, okay, this is what we have. This one is a little bit more tricky. Okay, I added on my list because there is a very strong impulse. It's not an imbalance, but if it gets down there and it starts getting some confirmation, daily wow longs and all that, you're Gabi, always wondering how you come up with all this in 3 years. Well, Davi, a lot of free time, nothing to do, no job, nothing, necessity, as simple as that. Daniel, I will watch this video 100 times. So always wondering how you come up with all that. So it's like, so imagine in the crisis in 2008, okay, I was a photographer, okay. I used to travel around Spain, even Italy, taking photography, 360 photography, 60 degrees photography for all kind of accommodations, hotels, national parks, and all that. I traveled a lot, but I was earning very little. And then the crisis came, and the first thing that all these hotel owners and all that decided to do is to stop investing on publicity and having photographies like an extra thing. They don't need it. They can do it with their phones. Okay, so a friend of mine came to me or talked to me about options. I remember about that, options, but I couldn't trade because I needed money and I didn't have the money. So I learned about a little bit about Forex and all that. On my trip to India, it's already explained in the community. And then necessity. I had no money, nothing to do. And I didn't want to work for anyone. I never worked for anyone. I just want to be free and decide my own fate with my actions. So I have no money, no problem. I will work hard to try and get it. And that's how you have a lot of time, a lot of, you believe in what you're doing. Nobody else believes, I can tell you, no friends believed in what I was doing. They were telling me, hey, look for a job and all that. Well, I don't want to work for anybody. Here in Spain, what the average salary is going to be like 1,000 euros. And with that, you can do anything at all. So I prefer to be starving to death than working for a boss and seeing all the money in front of my eyes and then just getting 1,000 every month. So no way. But let's continue with this. So if you take a look at this, for example, this one, look at that. CLR, Continental Resourcing, 12 months average money control. So price is rallying. Okay, so now let's talk about this. Let's talk about airlines. Okay, let's talk about airlines. What do you think is going to happen to airlines right now? To airlines like United Airlines, like Delta Airlines, Alaska Airlines, like Ryanair, like Boeing, go down. Why? Because nobody's traveling. I mean, they are almost all of them are, most of them are filing for bankruptcy, Iceland Air, I go a lot to Iceland. I love it. They are about to file the bankruptcy as well, like Wow Air did like a year ago. And but what happens now? Let me take a look. So let's start with an airline, any airline. Which one? Let me do this. Tell me an airline of one of the ones I said. Delta Airlines and that JetBlue, Delta Airlines, and then you're gonna tell me what you see there. So this is Delta Airlines, okay? What do you think is going to happen? Look at this one. That's what we want to buy, okay? Look at that one. It's getting there. So let's go American Airlines. Oops, that one is a super strong impulse, so looking for new areas of demand to go along and all that. So let's take a look at Alaska Airlines, Alaska Air Group. Whoops, look at this one. Already hit the 12 months area of demand. You see? And it hit also the 6 months area of demand. Okay? So it hit that area. Another one, British Airways, that was EIG or AIG, American, no. EIG, I think it was this one. EIG, yeah. Well, it's getting closer and closer to the origin of the move, which is an area of demand. Okay, Ryanair was a strange name, like Ryan. Come on, Ryan. Yeah, this one. Almost there. See, trying to get there. Booking.com. Booking.com. Well, wow, 6 months area of demand, 12 months area of demand, 3 months area of demand. That one got to the imbalance already. Okay? Make sense? Look at that. Southwest. Well, that one's got a lot of room, so that one short is good. Make sense? Airlines no concern of chapter 11. What is that? So, for example, cruise companies like Carnival Corp. Okay, so we've got that one dropped all the way down. It eliminated that area of demand. That one over there was poor, was dropping and dropping. It fully shot that area, so that one wouldn't have played out. P&O, what's that one? P&O, Pacific Orient, that one. Copy. Well, that one is approaching that area of demand. Oh, yeah, almost in control. So it's going to start running. Look at this. This is really, really, really bad. So if the bulls take control, then that's going to rally super, super, super strongly. So it's like, which one? For example, I don't know, TUI, the German company, biggest tour operator in the world. So we've got that area over there, okay, which was, look at that, already tested, used up. So what do rules say about all this? Bigger penetration expected, and that's what's going on. We need new areas of demand. We need an uptrend at least on the weekly and all that, but that's far from happening. So shorts are possible and the monthly are possible over there. No longs are allowed. So Norwegian cruise lines, where's Norwegian, that one over here. All-time lows broken and all that. So strong area supply, where's shorts. I've got my alerts up there. That's why I've got the red here. So look, I'm going to, don't you think that you want to be a seller when price gets up there? Look at that. That's pretty strong. So how long is it going to take? Maybe a year. I don't know. But in a year time, we're going to have lots of other stocks reaching the imbalances that we want. So that's what's going on on the markets. All this caused by obviously the fear that COVID-19 is causing in the markets, lockdowns, bankruptcies on many airlines probably, and that's lots of opportunity. But now we have to wait. So what we shouldn't be doing is say, oh wow, since it's been dropping a lot, then a bigger than expected, I'm going to be going long. And then what happened? What happens with that approach? Oops. Okay. So what happened? Damian can tell us about that one. So he was looking to go, he should be looking to go long down there, and then he said, no, I'm going to go short on the way down. And what happened? Loss. Okay, because you are not patient enough. So on all those that we saw, we are not being patient enough. Well, I'm going to be patient. I just go here if you've got the trading view. Well, there is no unlimited alerts, but you have other brokers like CMC or Thinkorswim and others. Intraday brokers, you go here, add alert, and you say monthly supply short. And there you've got the alert. When price gets up there, you start thinking of going short. As simple as that. Okay? So now we go to USD Brazilian real. Well, Brazilian real. So we've got a super strong area of demand here. Okay? DABI, there where loans will be possible again. There was another, let's take a look at the monthly. All-time highs broken. Okay? So isn't that an area of demand? Okay, all-time highs broken. Then price dropped super strongly. It took 3 months to create that imbalance. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 9, 10 months to retrace to that imbalance. And then hit the area, drop a little lower. All this is the accumulation, and then we get the impulse. And then all-time highs broken again, and that happens again. 1, 2, 3 months. 1, 2, 3 months. Doesn't this move resemble this new move here? How long is it going to take to retrace? I don't know. But that would be great to go long. But if you are trading Forex and just a few cross pairs, then you're going to have to wait for a long time. So you're going to have to trade the smaller time frame sequences, like the weekly, the daily sequence, doing intraday and all that. But if you have an alert set there and you are interested, then you can go long down there. Yeah, history could potentially repeat itself, Damian. So that's where, if I was trading stocks, then I wouldn't be looking to go long anywhere but there or there or there. Even there probably would have been a loss. Okay? So, one loss, one winner, two winners, on the monthly, okay? That one. Then we have to take a look at the weekly and all that. So, that's the way it works. Any other asset you want to look at? Still have like 10 more minutes. Iron. Okay. First of all, Reliance. Sorry. First of all, Reliance Industries, and the other one is Iron ISF. Iron. No. That one. That one. No? Yeah. Okay. So I'm gonna do these two. Okay. So first of all, Reliance. Okay. Clear our drawings. And now this is what we got. Reliance. I believe we did the analysis last time on this one, because this is the webinar's template and I've got the levels drawn. We're looking to go long down there, but just didn't retrace. Benu asked, yeah, but remember that there was a long bias because we had 3 months average demand in control, 6 months average demand in control, no shorts were allowed. So we did that like 1 month ago. So, and you said you had shorted Reliance and 14 1471, which is like over here. Why? Let me take a look at this. Okay, we've got a supply zone over there because of the supply zone on the weekly. Yeah, so that would be a valid trade on the weekly, but super aggressive. Look at that. Look at the engulfing pattern and the strength of the impulse on the 3 months and all that. So you shorted yesterday, but still there. So it looks like it could potentially be eliminated. So I wouldn't trade on that one. I mean, we can use engulfing patterns as confluences and all that, but look what happens here. What do we have here? We have a bearish engulfing pattern, good, but this is a 3 months, okay, time frame. That means that the red candle is 3 months of time, okay? So that means January, February, and March. The second candle is made of April and May, only 1 day. So this candle is 1 month and 1 day. Okay, long. This one is 3 months. Which one wins, Prakash? The present one, 1 month. Damien Avenue. So we've got a bearish impulse that is 3 months of time, and in 1 single month and 1 day, okay, and 1 day, it's 3 times faster. And not only that, okay, what do we have? 6 months in an uptrend demanding control. 3 months in an uptrend demanding control. So, shorts? No way, my friend. No way, my friend. As you can see, all the rules are put together, all the pieces of the puzzle are now together by doing the top-down analysis. Look at the strength of the impulse. Yeah. 3 months, 1 month, 1 day. No good. Okay? So that's how this works. Okay? So no longs were allowed there. And then if price reached that area, then we also had, what do we had? This is an NSE stock from India. What do we have by the time that price reached that area? Oops, Bank Nifty at 6 months, 12 months area demand. We had Nifty at 12 months, 6 months, and 3 months. 3 months, no, but 6 months and 12 months area demand. So we had the 2 major Indian indices confluences for longs. Okay, you were long on that one then, on Prakash, on this one, on Nifty and Bank Nifty? On Reliance. Okay, good. So if you were long on Reliance, then now you want to go short. It's not a good idea. Could drop further. So if you can adjust your stop loss or exit it, that would be great. So that's Reliance. Do not rely on the arrival. So this one is not reliable to short. Okay, good. ISF. So this one again, if you do anything on this one, what would you do? Set on figure for longs? Yes, Damien. On this one, longs or shorts? Longs. Why longs? Why longs? Well, let me do the top analysis. 12 months demand eliminated, out of alignment. 3 months demand eliminated. 6 months, sorry, in a downtrend. 3 months in a downtrend. Okay, monthly in a downtrend. Weekly in a downtrend. Well, 6 months demand eliminated, yes. That one over there. That's the 6 months area demand. Consolidation away, overshot. Okay? But we also have here, but it is true that we have a 12 months area demand, but the 12 months is now out of alignment. We've got another 12 months area of demand down there. Played out nicely. 1, 2, 3, 4 candles, and then dropped. Then rally, broke all-time highs, consolidation away, dropped. Rally, consolidation away, dropped, eliminated. So now, if you are using the 3-month sequence, shorts at the top. Okay, on the way up, longs could be possible, but we should be more inclined to go short than longs and wait patiently for the shorts, because it is clear that the bearish impulses are much, much stronger than the bullish impulses, and this level is already tested. Bigger penetration was expected, almost fully penetrated by just missed. I mean, it didn't eliminate the distal line by maybe a few ticks. Make sense? So short aggressively, and this is a very strong area of supply. Yeah, super strong. So that at the top could be nice. There was a counter trend trade out at the top, counter trend played out, but this is even stronger. Okay, good. So this one, even though we have a test at 12 months area of demand in control, it was tested, bigger penetration was expected and almost fully eliminated. Okay, so this one is already tested, fully penetrated, longs will be possible if new strong imbalances are created. As you can see down there at the monthly, we've got a monthly area of demand over there and an older area of demand over there. So this is tested. Okay, so we just cannot set and forget down there. If price drops down there, then we're going to have to wait for new areas of demand on the weekly. Monthly is possible, bullish engulfing patterns on the monthly, blah, 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 accumulation happening. If possible, bearish overextension on the weekly and all that. 12-month candle takes out a few years of upside candles. 12-month demand is used up. This one over here, you mean the upper one, copy? This one is not used up, it's being used up. It's different. Why isn't it used up? Because in order to have a level tested, we need the level to be tested. Okay, these are not two retests. It's only one test. We need consolidation away. So once price consolidates away up there, we consider this level tested. Now it's being tested a second time. It's being used up. We need consolidation away. Okay, but it's clear that this is weak. Every time price hit the pressure line, it went lower and lower and lower. So if price rallies over there with two bearish engulfing patterns, 2 years of bearish impulses, then from there it will drop lower. But don't think price is going to rally all the way to the top. Probably it will rally to the engulfing pattern proximal line or the 50% retracement over there, and from there drop again. Okay, makes sense? Isn't it a little bit more clear? Let's take a look at one more. Okay, which one? One last. Which one? Yeah, thanks so much for the community, all the efforts to help us. Can never thank you enough. Good strategy, dedication to us. Thank you, Gabi. Thanks a lot. Okay. One more. This one. This one, Andre? Is this the stock you want to look at? The next one. Okay, okay, you are probably from the UK. This is the, okay, good. Mid. Okay, good. So this one looks very, very similar to Reliance. What was the last one? Come on. ISF. Okay, good. And then we've got, sorry for that, I'm being a little bit slow now. So what do we have here? We've got 12 months area of demand tested, and further penetration has already happened. So we are allowed to go short. Where are we allowed to go short? At this super strong area of supply in the monthly. Okay? That's how it works. We've got 3 months area of demand over there that was almost tested for a second time. So if price retraces down there, weekly areas of demand are needed in order to go long, because we've got the 3 months area of demand in control. It's not uptrending anymore. So we need new weekly area of demand, and there is no way that there will be a weekly area of demand here for a long time. Why? Because the weekly area supply is right there. So, and there is no bearish trend line to be broken. So there is nothing to go long at on this one. So the strongest impulse, weekly supply, monthly supply, bearish engulfing pattern, and all that. And as you can see, it took 3 months to drop, 1 month over there. But if this 3 months candle was like there in one single month, no shorts, like the one we looked at before. Remember the Reliance. On Reliance, it took 3 months for price to drop, and then 1 month to rally. On ISF, it took 3 months to drop, and this month, 3 months candle, this monthly candle is fine. Okay, it's fine. It's okay. So that's telling us that the strength of the bearish impulse is still much, much stronger than the bullish impulse. Yeah, many of them are like that, really. So many, because they are highly correlated. I mean, they are being traded by the same guys, the same robots, the same algorithm, the same high frequency trading. I mean, this is owned by a few big boys. I mean, they are trading the whole thing, and they are hedging here, hedging there. I mean, the price action is more or less the same. So the only thing you can do is to try and not to have a more diversified portfolio with different sectors and industries, and you maybe go long on euro, and then go long on short on an airline company, and then you go long counter trend if you want on crude oil, on oil-related crude oil companies and all that. So it's a little bit tricky, okay? No long at S&P either. Well, let's take a look at SPY ETF. SPY ETF. We've got the 6 months almost in control. The S&P futures is more clear. This is what we have. Okay. Longs. Short will be possible at the top counter trend if we have the correct arrival. Okay. Look at this. 3 months, 1 month. So if it keeps on rallying very strongly, confirmation for shorts. Make sense? We've got right now a weekly area supply and control that could provide some shorts. We already have a 4-hour area supply over there, which is why now, if you look at all this is my global stock watch list, okay? And look at it, look at that. Negative, red. Look at that, red. Almost only a few green ones. Okay, all of them almost red. And one of the green ones is this one, is the one I showed you before. Okay, this is only 12%. But as you can see, all of them are highly correlated with the S&P, NASDAQ, and all that. So if the S&P is within a weekly area supply over there, which I'm expecting that to be eliminated, if we take a look at NASDAQ, no, this is not the one I want to do, NASDAQ and Q. Okay, supply has already been eliminated. Okay, so look at the S&P. It's there, still there. NASDAQ has been eliminated. Dow Jones, let's take a look at DJI. Okay, not there yet. Okay, but similar scenario. You take a look at Nifty, it's got the same scenario. But on Nifty, as you can see, Venu and Prakash and all the Indian traders, there is no weekly supply over here. Whereas on NASDAQ and Dow Jones, say we've got S&P, we have weekly supply. But on Bank Nifty, neither on Bank Nifty nor on Nifty 50, we have supply shown on the weekly. So The thing is that if we've got the weekly area of supply in control on the S&P going long right now on American stocks, it's not a good idea. Wait for a bigger retracement. Okay, because they are highly correlated. If you look at stocks, almost all of them look at like these. And if you put side by side the major indexes, they have the exact same price action. That means that it is being traded by the same people. Not you and me, but by the same old people, the old dogs. Okay, make sense? So this is what we have, the runners today on my watch list. Okay, so look at these bearish impulses. Look at this one. Well, lacking coffee, we want to go short up there. I'm going to do this very, very fast. Okay, lacking coffee, short up there. So on this one, short at the weekly area of supply. PBF, look at the monthly area of supply with everything in the downturn. So I've got my alert set. Car, look at these. Well, this one is a little bit more tricky. So leaving this one aside. So that one, longs down there. THC, short up there. APA, short up there. This one a little bit more tricky, but short of the monthly area of supply. This one, very clear, short of the monthly area of supply. HP here, short a monthly supply zone. So as you can see, it's how long does it take me to make a trading decision. Very, very, I mean, it's super fast. Super fast. If you are looking at the bigger time frames, then you could say, okay, I'm going to have a smaller account where I'm going to be doing smaller sequences and all that. Okay, have another account to trade all those, but for the bigger picture, this is what we've got. So the only runners today, well, the one that I managed, this one, WPM, is rallying again, weekly average demand over here. This one over here is not a good idea to trade because we have bearish and bullish impulses are strong. GME, GameStop, looks like a new area of demand is being created here. And then this one is rallying, lots of room for price to reach this Barrick Gold, the biggest gold miner in the world, new weekly area of demand over there. So, Anwar, what SQ you use for stocks? What do you mean SQ? What do you mean with SQ, Anwar? Sequence. I'm using the 3 months, 6 months sequence. Even the 12 months. I'm not using the monthly sequence anymore. Bigger time frame sequences. So look at this one. New area of demand being created there. Look at this one. Well, that one not that great. This is another silver. This one not good yet. One trying to break higher. New area of demand on the weekly. This one not good, but look at that. 12 months area of demand in control. 6 month demand in control. New weekly area of demand. No, not yet. This one, look at that. Look at the strong impulse. It didn't retrace at the 6 months area of demand. It did retrace at the monthly and then rallying, so no short there. Look at the bullish engulfing pattern on the monthly. So this is crazy. I mean, this is also related to gold and all that, Newmont, weekly demand. Here we've got a bearish bias with this tested area of demand 12 months eliminated, so we can go short and weekly and the monthly. And I can continue like that and then go over all these stocks probably maybe 20 minutes because I have to talk to you. Otherwise, it's like 10 minutes. Okay? Because I don't go all the way. I have my colors, and I say if there is no color, I'm not looking at it. And if there is this color, I will do this, I will do that. It's super fast. Okay? And I believe that's everything. Hopefully the recording will be okay this week. Last time I did the webinar, I had an issue and I had to solve something and I forgot to resume the recording. But this time I did not touch the recording software, so it should be fine. And that's it. Enjoy the rest of the day and have a great weekend and stay safe at home. Bye-bye.